Hey folks, Bob Desmond here over at the Contrarian Trader, and welcome to Best Stock Charts for the coming week. It was a wild week last week in terms of stock market performance. It was a wild week in terms of economic data, not good. And it's going to be a volatile, rocky week this coming week. So make sure, join us tomorrow night, 6 p.m. Eastern Standard Time for Sunday Night Futures Live. There's a link below. Enter it, get alerted 15 minutes to a half hour prior to us going live. Or just click the bell button and you'll get notified the minute we do go live. What we're going to talk about today are how did we do last week? Why are you listening to me? How do we do on our earnings trades? We're going to talk about that. We're also going to talk about our 5 top stocks for the new trading week. We're going to go over those charts. We're going to set up the alerts, and we'll be using our friends over at TrendSpider, their technology, and our sponsor, folks. Before we get to it, don't settle for ordinary trading software. Times have changed. You need to ramp up your game by using automated technical analysis, an up-to-date 2021 scanning functionality, as well as alerts. So automate your grunt work, speed up your technical analysis, and improve your accuracy. You also reduce costly analytical mistakes by using their alerts. Find winning chart setups and save time by using their scanning tool. So TrendSpider, 35% discount code below. Take advantage of it. Lowest price on the web. Let's get to it. How was our week last week? Let's talk about it. On Monday, we opened up a position in Tesla. And what we did is we used a strategy, an option strategy called a short strangle. And basically what a short strangle is, I'm going to walk you through the actual trade as well as our analysis of why we chose the strike prices that we did for each one of these trades. So in short, a short strangle is the sale of in our case, a deep out of the money call. Some people use near the money calls. I like to go deep out of the money. And we also simultaneously will sell a deep out of the money put option. So we're not buying the option. We're taking advantage of the expensive options that stocks have just prior to earnings. The following day, what occurs is what you call IV crush. Basically, all the speculators get annihilated the next day, and that's how we book a profit. I'm going to walk you through it. So our first trade was Tesla. And I post these in the members area. This is the trade itself, as well as our analysis, our strike price. Now, in the case of Tesla, we sold, at the time, the shares were trading at $658.49. And what we did is we sold a deep out of the money call option, 743 strike price, with a 99.9% chance of the shares being put to us. There are always binary events. You can't go by this literally, okay? So take it with a grain of salt. And to the put side, we sold the 575 put, and here's the trade, the actual trade. And you can see that we sold 4 contracts for a credit of $5.86. We bought to close that contract, and we booked a profit on Tesla of 77.5%. Now, that's not on the stock price. That's only on the option price, but still a decent day's pay. I mean, we only held it for less than 12 hours. I mean, we opened it late in the day. We closed it automatically. Our computer shuts it down early on in the morning. Now, the next trade that we put on was Microsoft. That was on Tuesday. And that trade was a bit different than the Tesla trade. It was not a short strangle. It was simply a naked call option, deep out of the money. Let's go to the calculation. So here was our probability calculator. You could see that I had a put option entered here, but I didn't execute on it because I didn't like the premiums that I was being paid for taking on that kind of a risk. So I said, you know what? I don't like the Qs. I think they're very expensive. I'm just going to sell a deep out of the money naked call, $295 strike price. And for that, we were paid $1.39 per contract on 10 contracts. And on that trade, we booked about a 50% profit. The next trade was Facebook. on Wednesday. And for that trade, here was the probability calculator. We did do a short strangle here, expiring last Friday. And at the time, the shares were trading at 374.23 per share. We sold the 400 strike call option at the same time. Simultaneously, we sold the 347.50 strike for a probability of trading out of the money at 99.84%. So very, very good odds in our favor to make this trade. So here is the actual open up here. We sold the contracts for $2.47 per contract. And on that trade, we booked a profit of 70%. And for the last trade of the week was TWLO. Now that one they announced on Thursday. And so normally I have a rule of thumb that if I make between 50 and 70%, I usually close out the trade. But in this instance, and we did that with the 4 other trades, but in this case, the shares expired, or the options expired worthless on Friday. So we made 100% profit on this trade because we just let them expire worthless. And here is the trade. Here's our probability calculator. At the time we opened up the trade, the shares were trading at $391.41 per share. Pretty much using the 90-day historical volatility. I always use the worst case number. We had pretty much 0% of these shares being put to us. But remember, I always want to preface this. Simply because we're using a probability calculator doesn't mean that we can't break out and above these call side or drop down below the put side levels, because we have earnings, which is a binary event. So the probability calculator doesn't understand that. So this is why we always want to manage our trades very, very carefully. We always want to be as risk averse as possible. So in this case here, again, 50% profit. Here is the opening trade, $2.50 on 10 contracts, and they expired worthless on Friday afternoon. So that was our week last week. Very strong. Our gold mining stocks did very well. Silver did very well. Silver mining stocks did very well. Coinbase did very well. What else? Airbnb did very well. We opened up a trade on Amazon when it took a nosedive on Friday. We'll see how that does. We'll manage that trade pretty carefully. So let's take a look at the trades we are looking at for the new trading week. The first one up is going to be Enphase. And again, folks, we're going to be using TrendSpider, automated technical analysis. I've already gone over my thoughts about the market. How are we going to be positioned? And my thoughts on these stocks we're going to set up the alerts on now with members on the week ahead commentary. Members, that's posted in the members area. Go check it out. So now we're going to go over our focus stocks and set up our rules-based approach, again, using TrendSpider. Now, Enphase is looking really good here. Keep in mind that they may be reporting earnings this week, as goes for all of these stocks, GPRE, RIOT, Enphase, BCOE, which is Brinks, and we're going to go over the SMH, which of course we don't have to worry about earnings there. So the first chart up we're going to go over is the weekly chart of Enphase, and we're just going to take our crayon out and draw our resistance levels and our support levels. Now you can see, I'm going to take the automated trend line off. Watch this candlestick right here. This is the value of TrendSpider. Click of a button. We hit that support level and we bounced off of it. And then we began to put in higher lows. Now the question is, do we break out to new higher highs? Okay, so here's our alert. We want to wait for a breakout on Enphase. And then we're going to look to open up a position after we break out. We don't want to buy right here, right now, because we're trading into weekly resistance. We want to wait. We want to make sure that Enphase is worthy of our investment dollar. We work too hard. Wait for the weekly breakout before you get involved. You have RSI, which is trending up and breaking out. Daily chart. A great day on Friday. here was an outstanding bullish reversal bar. I mean, let's take off the automated trend lines again. This is the algorithm, folks. Put it back on. This is a buy signal all day long. We had seen a significant breakdown. In fact, on the 16th, we broke down below support. But we caught a bullish reversal bar closing back above now resistance, and then it's been off to the races ever since. Friday was an outside reversal bar, but the problem is weekly resistance above. So we want to wait for that breakout. And we don't care if it's above that weekly breakout at 10 a.m., 12 p.m., 3 p.m. All we care is at 3:59 Eastern Standard Time, we have a breakout above weekly resistance. So it doesn't matter where stock trades intra-period. What matters is how it closes. So end phase looking rock solid into the new trading week. Just beware, resistance above. The next chart is going to be the SMH. This is the Semiconductor ETF from Van Eck. And I'll tell you, I went over this with members on the weekend commentary, and we took a look at the XLK, which is the technology ETF. We took a look at the Qs. Both the Qs and the XLK were down on the week. However, semis up in a very, very big way. Up, the SMH was up 2.75% on the week. You want to talk about relative strength. That's some powerful stuff. So the weekly chart is beautiful. We initially were sent down on the week, but we reversed to close up on the week. And we closed up above critical resistance at around 256.30 per share. That's powerful. That's powerful. We closed right near the highs of the week. What's the rub? There's always a rub in stock trading, right? We have a bit of resistance above here. So we got to keep that in mind. I believe I have an alert set here already. Yes, I do. So the alert is we want to know if we get a new breakout. This is actually a monthly resistance level we have set. So if we do get a breakout, that is a significant breakout for the shares of the SMH. Now, what's going to matter here, you need to keep an eye on the 10-year yield. The Federal Reserve is in there toying with the yield curve, trying to keep yields lower despite the fact that inflation is ripping through the ceiling. This is not going to end well. However, in the short term, if yields keep going lower, keep looking at the semiconductors because they're showing relative strength versus the rest of the market. Daily chart. Now, the daily chart is good. The caveat is that we have resistance above. This is monthly resistance. And here is a couple of resistance lines on a daily basis in red and in green right above. So it's not going to be a straight shot higher. Now, with all of these resistance levels above, what we want to see on a breakout is a pullback and a retest. We want to make sure that after we break out and we pull back, that these now become support levels, but at current, they are resistance levels. So technical traders like me, we have OCD, obsessive compulsive disorder. It's just what we have, all right? We like to touch things, right? So we want to make sure that we're not going to get head faked out. We've seen it all too often. A stock breaks out, next day drops back down and fails. So what we want is a breakout. We're not going to go all excited because we simply broke out. We want to see a pullback and a retest, maybe 1-2 days. You don't want to see more than 3 days. Then it gets suspect, that breakout, because you're getting too many retests at that point. So the semis are looking rock solid into the new trading week. We already have our alerts set here. Not much more to do. I do want to point out that RSI is moving up higher. Now, it's great that the shares of the SMH outperformed pretty much the entire market last week, but that's only going to last so long. So if this market begins to do a nosedive this coming week, we're not going to be trading the SMH because you're expecting too much, because you have so much margin debt out there that people are going to be forced into forced liquidation. And people are going to sell what they could sell. And usually, this is the crazy part, is that people will keep their losers and sell their winners. That's stinking thinking. So the semis will not be immune from the sell-off if, in fact, we begin to get a sell-off next week. So keep that in mind. Maybe a day, maybe a half day, maybe 2 days, but it's not going to last. It's not going to continue to trend up higher with the S&P 500, with the Qs, with the XLK driving down lower on volume. So that's the semis. Next chart up, GPRE. Never heard of the company, but I'm loving the chart. Now, this is a weekly chart. Now, the weekly chart, if you use the automated trend lines, they'll identify some support levels down here, but really nothing actionable. So we're going to draw our own support and or resistance levels. And you can see that last week we broke out. Very, very nice. And we're also putting in higher lows. Also very nice. You have a bunch of moving averages down here, rising, acting as a rising floor on the shares. So what we'd ideally see next week is this. Here's a pullback. I mentioned this earlier. We want to see a retest of the breakout point. It happens more often than not. We're going to keep a little bit of sensitivity on because we already have our breakout. Now we want to get in or around where we broke out of this line here in black. So GPRE, and we'll keep this active for 2 weeks, and we are good to go. Now let's go to the daily chart and see whether or not we're seeing a different story there. We believe in multi-time frame analysis, so we always want to look at bare minimum weekly, daily charts. Ideally, if time allowed, monthly charts, weekly charts, daily charts. As we're speaking about monthly charts anyway, the month is over. Let's take a look at the monthly chart of GPRE. And I'm glad we did this because in a monthly time frame, we are showing really, really good volume. Wonderful price action. They try to take the shares down. They get bid up. This has happened several months in a row now. I want to check out seasonality. This is a feature that comes included with TrendSpider. GPRE. We want to see how the shares perform normally in the month of August. August is not the most seasonally favorable period of time for GPRE. It's up only 42% of the time, whereas in July it's up 57% of the time. The best month out of the year is February, up 69% of the time, going back to 2007. So just keep that in the back of your mind, that seasonality, not the best for GPRE in August. But that being said, if we continue to break out, let's go to the daily chart. If we continue to break out, then we always just want to do what we normally do, set our stops and look to exit. So let's talk about that a little bit. Let's talk about the daily chart. I love how you have your 2 and 3 standard deviation Bollinger Bands. They're beginning to widen out. That's setting up for a Bollinger Band squeeze. Now I'm going to overlay the automated trend lines. This is the algorithm. And you can see here, interesting, you could see that where I drew my manual line, there was also here in red on a daily time frame, a recognition by the algorithm that there was resistance above. You don't get much tighter than this in terms of human mind being aligned with the computer. So that makes me feel pretty good about myself right now. Yay! So we also broke out and above a resistance level on Friday. Very powerful. So what I want to do here, I want to get notified. Let's do this. We'll keep very little sensitivity here. Very little. A wee bit. Because we don't want it to fire off prematurely. We closed pretty close to this breakout point. So I don't want to get an alert set off for no reason. There we go. A little bit of sensitivity. Okay. So GPRE daily retest of support. Watch for 3-day rule. Now, what do I mean by and or breakdown, which I spelled inaccurately? They even have spell check. So what I mean by that is this. I not only want to know when we touch or bounce off of this support level, I also want to know if we break through it. The reason is that, as I mentioned earlier, that the ideal entry level on GPRE is a retest of the weekly breakout point. So if we come down here to this range, that gets me pretty excited because our risk versus reward at buying at this support level versus up here is far better. Far better. Because remember, what is our job when we come to work each day to trade equities? It's not to lose money. It's risk management. So I'm hoping that the alert fires off and says that we broke down through it. Now, if we spend 3 days of consolidating above this daily support level, well then, we may have just seen the lows of the week, and this is going to hold, and we're going up higher. The only thing I will say is I'll bring the seasonality card out of my pocket, and I'll say, remember the seasonality. So the way you work with a month where the chart looks good, yet seasonality does not look favorable, wait for your best support level to get hit. That way you use a tight stop. RSI looking outstanding. And the RSI is confirming this breakout. It is breaking out as well. Good stuff. The next chart up is RIOT blockchain. So RIOT blockchain, part of the cryptocurrency trade. You could see that we put in a high back here at 79.50. We had a closing price on Friday at 32.95. So it's been halved. Now we're interested. And I remember talking about RIOT blockchain back here when it was in fuego, trading above the third standard deviation Bollinger Band back in February of 21. And I said, this is not going to end well. This is not going to end well because you have too much hot money chasing this stock, and sure enough, cut in half. But now it's beginning to come back alive. Why do I say that? What am I looking at here? Well, simple. Let's take our crayon out. We're putting in higher lows after continuing to put in lower highs, lower lows for months. Now, this is what you call a W formation. And up here is your pivot point. And that pivot point is at $40.34. Now, last week, okay price action. We closed above a couple of moving averages. Good to see. Our RSI is doing better. It's hooking up. Volume rose last week versus the prior week, but still down below the moving average in blue. Daily chart, love the RSI here. Love the daily RSI. And I love this consolidation. This looks like a bull flag setup. So I think that we are going to break out. So what's the play? We're going to set up 2 alerts here. One at resistance. All I care about is the close above. I don't care if it touches. I don't care if it trades above it intraday. All I care about is the fact that we are closing above that resistance level or have closed above that resistance level. And I've been asked, why do I write daily or weekly time frames? The reason is that when I go to read these quickly, I know it's a note to myself that a daily chart is less significant of a breakout than a weekly breakout. A weekly breakout is less significant of a breakout than a monthly breakout. So the higher your time frame, the more significant that breakout from a longer term perspective. So that's why I label these with a daily, weekly, monthly breakout. Now, long entry or add, what does that mean? Well, what that means is that I have another strategy to deal with this trade as well. And that is this. Sure, I could buy on the breakout, but what if we pull back and we do a retest down here? Is that not worthy of taking a look at, speculating? A retest of support, which held right back here? I think so. So let's set it up and let's get notified. We'll keep a little bit of sensitivity on, a little bit. There we go. We also want to get notified of a breakdown. So our strategy is set here. I'm loving RSI. This is a W formation above 50. That is sexy stuff. If you're a lover of the RSI, you know what I'm talking about right now. This is a great pattern on RSI. Very, very good looking stuff. I'll tweet that out later on. All right. The last stock we're going to go over is Brinks, BCO. And with this stock, what I want to talk about first is not the weekly chart, but the monthly chart, because it's telling us a story. You could take a look here, and you could see that we've had a multi-month consolidation. So as the saying goes, the longer the consolidation, the greater the validation of any breakout. So we're looking at a consolidation that began back in November of 2020. We stair-stepped up a little bit, but by and large, we're range-bound here. And there's the lower spectrum. Upside 84.65, the lower end of that range 67.76. Now, what I want to do is I want to illustrate to you how much upside potential there is with this stock, because you don't use the algorithm, the TrendSpider algorithm, for simply just identifying entries. You also use them to identify exit points. So case in point, monthly chart, we'll throw up the automated trend lines, and there you have them. So if we break out above these two resistance levels on a monthly time frame, we're looking at rising resistance in blue up at around, we're going to see, we're going to par. We're going $102 per share. We're going to have a bit more resistance at around 105 per share. Now, when you take a look at a weekly chart, we had broken out above resistance back here in June. Then we dropped back down into this trading range. This is a breakout point failure, and we retraced all the way back down to support. But last week, we broke out. So what I want to do here, I want to see if we get a retest. And when I say we broke out, remember that the markets were by and large down. Brinks up. That's relative strength. So here's our alert. Brinks weekly retest to breakout point. We get long on that retest. Boom, set. Take a look at your RSI weekly time frame. Hockey sticking up. Good stuff. That's a breakout. Daily chart. Now, you may be looking at this and saying, wow, a little bit odd price action on Thursday and Friday. We had a reversal day, kind of like a spinning top formation on Friday. What gives? What happened? Take a look at the algorithm. It identified resistance above. That's what happened. So remember, you're trading against computers by and large. It's not just another retail guy that you're trading against. You're trading against high-frequency computers. So they know in advance. This is the value of having TrendSpider. Again, 35% discount code below. We broke out on RSI. We're pulling back. We did a retest. I think we're breaking out here on Brinks. Bullish. Folks, thanks for joining in. If you have any questions about the trades that I put on last week and took off, leave a comment below. Any questions whatsoever, leave a comment below. Subscribe to the channel, share with a friend. Join us tomorrow night, Sunday Night Futures Live. And please don't hesitate to become a member of the gang. We have a 14-day free trial offer. Get TrendSpider for free if you join up for silver or gold level memberships. And with that, enjoy the remainder of your weekend. Hopefully see you tomorrow night. Be well.